Welcome to the Midday Market Update for September 22nd, 2020. My name's Kevin Hill, as always, here with Michael Vincent. And
good afternoon, everybody.
We have a fantastic show for you today.
We do have a really good show. We really do. And it's interactive, by the way.
It is.
Right? So LinkedIn, Facebook, get your comments in and questions in, and we'll do our best to get them answered. I mean, we're going to be talking a little bit about the Nikola investor call that occurred this morning, right?
Yeah, so the first one without Trevor Milton is a story that we broke here at FreightWaves before anyone else, that he was out as chairman.
Sunday night.
Sunday night, we published that, and it created a whirlwind. Certainly, they pushed up their release and their announcement up to the wee hours of Monday morning,
right?
2 a.m. So it was big news at the time, and it still continues to be. There's the exit package that he has. There's other things. The new chairman of the board, the new direction for the company. We'll be talking with Alan Adler, our Detroit bureau chief, who covers Nikola for us, FreightWaves, here coming up. And
he's got some great insights on. Is it Steve Gursky who's taking the helm at Nikola, right?
Yes.
So he knows Steve Gursky from I believe General Motors days. So he's got some great insight with him. We talked with him a little bit yesterday.
We're live and interactive.
All right.
And Alex Rue, designer operations. Morning, Michael and Kevin, and
morning.
Then our good friend Nico Brown. Hello, everyone. So hello, Nico.
Nico.
And Alex. So we have we're going to talk about employment and logistics too. A little bit later with...
Yeah, we have Hunter Whirley, who is managing partner at FPC Riverwood, and we'll be talking about the hiring market right now, recruiting, et cetera, what's going on in that space in logistics, which will be very, very interesting. And then we have LaRocco.
LaRocco, and we'll talk about some international issues, international trade issues, maritime shipments, and then forced labor and kind of regulations around that. And what we all need to know about sourcing and procuring material and inventory, procuring, yes, all over the world.
Purchasing.
So, but let's kick it off right now and talk some Nikola with Alan Adler.
Yeah, right. Let's do that. Alan. Hey, good morning, sir.
Good afternoon, guys. Good afternoon. Nice to be back with you.
I guess it is.
You didn't feel like Sanjay Gupta on this network. CNN.
I feel like I haven't talked to you in like 24 hours or something. It's been so long.
It's been almost that long, Michael.
Hey, so what's going on? You were on a call this morning with I guess Nikola had their investor call this morning, 11:15 a.m. Eastern time, I believe it was, and you were on that call. So can you tell us, give us a little insight of what was on that call?
Yeah, well, Kim Brady, who's the chief financial officer at Nikola, has been making the rounds, quite honestly. I think it's fourth one in about 2 weeks. This is just a season where a lot of these conferences that are typically held in person, of course, are online now. So it does provide some access that we wouldn't get otherwise. Mr. Brady did a good job, I guess. Basically, as the first appearance post Trevor Milton, basically saying, you know what, this was Trevor's baby, and it hurt him to have to give it up, but that's the way it is. He said nothing's really changed in terms of their plans for the company. He said he thinks there's probably some misunderstanding, and that's certainly understandable after all that's gone on the last 3 weeks about just what that mission is. And he said, look, we're an original equipment maker. That's what we do. We build trucks, and we're going to make hydrogen, which is a little different. But the fact is that we haven't changed anything we're doing. Just stick with us. We know what we're doing. And yes, as an OEM, we do pull together parts from other places. So to compare Nikola to Tesla, which has been done many, many times, probably not correctly, Tesla tends to be very vertically integrated. They do everything themselves. They make everything themselves. They buy a few things, but generally they do everything themselves. Nikola says that's not us. And they didn't use the Tesla description, but they said essentially we do work with others. We have partners, and we buy commodity goods from others, and that's what we're doing.
Yeah, so I guess it's really, it sounds like he's being a little bit more transparent about what their structure is and what they're going there, because certainly if you listen to over the years, it seemed to me that it was implied that they were at Tesla. Did it not to you, Kevin?
I don't know over the years. I mean, certainly in the last few weeks, we've come into this internal system, kind of like an Apple or a Tesla or open source system, which Tesla has. I don't know if they've recently positioned. What do you think, Alan?
Well, I can't speak to Tesla. I don't really cover them. I will tell you that from a Nikola standpoint, they've always talked about partners. I mean, ever since I've been writing about them, both for FreightWaves and for my last employer, it's been about partnerships. And, Bosch comes to mind a lot because they've had embedded engineers at Nikola for, a couple of years now. And it was interesting this morning that Kim Brady said, Bosch gets something out of this too, because they're trying to supply many, many customers with fuel cell systems, and they really needed an OEM like Nikola to practice on, and so, there's a two-way street here. I mean, obviously, the co-development of a fuel cell system with Bosch, which now is just going to be located in Europe because of the recent General Motors deal. I think what Nikola has done, and I don't not in any way want to sound like a fanboy here, but I think what they've done is they've been very, very, very flexible. They've changed a lot of things. Maybe they haven't made friends along the way in terms of suppliers. There was a discussion recently about the maintenance program for the trucks, that fuel cell trucks will be a little different, and that this package business arrangement that Nikola has includes maintenance on the trucks for 7 years when you lease them. And they had an exclusive deal with Ryder to do that maintenance, and they broke that a few months ago. Not a lot of explanation, just said we want to be able to go elsewhere to get the maintenance done. And I think that this idea of changing partners is done in business a lot. And Nikola, of course, being under so much scrutiny and having, quite honestly, just as many detractors as it has fans, I think it just brings out, especially the Tesla gang, love to pick on Nikola because, they don't like fuel cells, and they certainly, don't like anything that would be counter to the way Tesla does things.
We have a couple comments. Our friend Wayne Craig is
hey,
saying
Wayne.
hi from Laredo, Texas. And then Rob Bussey saying hi. So is Rhonda Zimmerman. So hello to everyone out there. And so, Alan, it sounds like, it's business as usual at Nikola. It's the same plan, grinding away with these partnerships with or without Trevor Milton. And we did some coverage on his exit package and kind of what he's giving up with this move.
Yeah, and he is. First of all, he is still and will be a billionaire, because he owns a little more than 20% of the shares in Nikola right now, about 91.6 million, I think. And as of yesterday's closing price, that's about $2.5 billion. So he's still on the Forbes 400 list of billionaires. He was one of the 12 under 40. I think he's 39 now. So he's got that. And I'm still trying to figure out, I've got to read deeper, but I believe I read last night, he can, in fact, start to dispose of those shares in December when the lockup expires. There was a 6-month lockup from the time the company went public in June. So he can begin to dispose of those if he so chooses. But he gave up yesterday a pretty nice deal under which he would consult with Nikola for 2 years at $10 million a year. Now, that's more than most CEOs make, and he was, for a time, CEO there before giving way to Mark Russell. But that deal is gone. He gives up a lot of sort of performance-based shares that, in the hundreds of thousands of those. Those go away, but he is going to get an early vesting and early payout on some share grants that he has. So I don't think we need to shed any tears for Trevor financially. If there's anything here that's sad, it's that, as Kim Brady put it this morning, this was Trevor's baby, and it's going to go on without him.
Yeah, so Alan, I'm interested. We spoke yesterday about some of one of the stipulations in the 8K filing. It's quite evident that we don't need to shed a tear for Trevor Milton, as he's gotten his golden parachute kind of deal going on there. But did you read through any of that 8K, or was there any revelations in those stipulations other than?
Unlike yesterday when I was a little blindsided. Yes, I did spend some time with it yesterday.
Right.
You know, Dooner mentioned the whole thing about social media. You know, Trevor basically is off the air now unless he gets permission from Nikola to speak. We noticed last night that his Twitter account was still there, but I suspect if you look today, it won't be. It's interesting that he's no longer listed, you know, among the directors. He did give up his board seat at the company. And basically, other than some ad hoc consulting through the end of this year, he's done. You know, he has no more connection with the company whatsoever. And, you know, he can't badmouth them and he can't say negative things. You know, a lot of that's standard fare in a severance agreement. It is interesting in the 8K that there's specific language that says he was not terminated. You know, that's something that I think from a face-saving perspective is really important at a time like this. But I think, Michael, you said yesterday, you know, this agreement looks like it was written in somebody's back pocket. I don't think it was written too soon, but I'm sure in the last week it was pulled together.
Yeah. There's too many specific things in there for it to be pulled together on a Sunday evening.
There definitely is.
Yeah.
So, Alan, on the analyst call today, was there any mention on a possible SEC or DOJ investigation? Did any of the analysts ask this, and what was Nikola's response?
Yeah, interesting response on that one was that we have not heard anything. This is the way it came down. We've not heard anything. When there's more to disclose, we'll disclose. And Kim Brady specifically mentioned a Wall Street Journal report, which is basically a pickup of some earlier reports in the Financial Times and in Bloomberg. You know, so a lot of people say that these investigations are going on. They may well be, but neither agency, neither the SEC nor the U.S. Attorney for the Southern District in New York has confirmed them. So at this point, yeah, they may be looking around, but I think Kim Brady was pretty clear. They haven't been contacted. So, you know, he did mention again that Nikola reached out to the SEC itself after the Hindenburg report on the 10th of September.
Interesting stuff. So yesterday, sorry, Kevin, but yesterday we asked you this question, and for those who weren't watching What the Truck yesterday, I don't know what else they would be doing, but can you give us a little background on who is this Steve Gursky who's taken the helm there?
Yeah. Okay. So Steve Gursky, longtime Wall Street guy, analyst on the street, eventually left that calling and became an advisor to former CEO of General Motors named Rick Wagner. You know, this was back in the late 80s and around the time of the Great Recession. He ended up joining the company as, you know, in sort of an operating role, which he really had never had prior to that. He ran OnStar and some of the technologies and worked out some pretty interesting partnerships at General Motors when he was there. And then he went on to run Opel, which GM owned until 3 years ago when they sold it to PSA in Europe. So he gained a ton of operating experience. Another gig that he had was advising the United Auto Workers at one time, which was interesting because they've gone through some very difficult times with the automakers, especially during the Great Recession and things like that. And then ultimately he left GM, I believe, in 2016 and went on and formed his own company called Vecto IQ. Vecto IQ is basically a company that is a shell company, and it's there so that it can raise money, which they did, $230 million in 2018, so they could go buy another company and become that company. This is the reverse merger of the blank check company that has been talked about a lot. So that was his starting point there. He took with him Mary Chan, who had run OnStar at General Motors, and a few others. Interesting this morning that Kim Brady said that, you know, we're really grateful to have Steve as the chairman, but when he came, he brought a ton of engineering help and background with him from General Motors.
Yeah. Wayne Craig has a great comment here. Trevor is the ultimate salesman that could sell you his BMW, and he's driving a Chevette. And I think that kind of sums up sums up everything. And my final question to you, to Alan, would be, and I know Dooner's listening, and his ears are going to perk. Are we still going to be able to maybe possibly buy a Badger truck in the future?
Okay, this is me only talking, okay?
Okay.
I think you will never see the Badger. And I think you'll never see the Badger because it's associated with Trevor. And that doesn't make it a bad thing, but it was a rather big hype activity. There was no Badger a year ago. There were some drawings, but there was no plan to build this truck. It became a way to keep buzz going around Nikola. And ultimately, I think what happens now that you've got, a Steve Gursky and a Mark Russell and others going, I expect to see a renegotiation with General Motors. I don't think they're going to be building the Nikola Badger. I think they're going to be supplying the Ultium batteries and the Hydrotech fuel cells for the trucks. And I think the focus over at Nikola is going to increasingly be on these over-the-road trucks. Why is that good for GM? It's good for GM because GM is not in that space. GM does make pickup trucks, and even though having more of them to build by building the Nikola truck on top of their own platform, it still isn't as good as getting into a new area that they're not in.
But thank you very much, Alan. And I agree with you. I think probably getting rid of the Badger operations probably the best for Nikola right now. So how does our audience reach out and contact you directly with any story ideas, contacts?
Sure. A. Adler at FreightWaves.com. Also at Alan Adler on Twitter. And LinkedIn, I don't know what my LinkedIn thing is, but you can find me out there too. So listen, thank you guys. Appreciate the time.
Thanks, Alan.
Thanks, Alan.
And hey, before we go to Zach, I just want to mention these stories, actually, there's a few out there, and all the headlines and much more on FreightWaves.com. So go there and check out those headlines after the show.
After the show, go check out those headlines. We're going to keep following the Nikola story as long as it goes, and it looks like it's business as usual from the analyst call. That's what it sounds like. It's still the same plan. There's no change in strategy. It's just a new chairman.
It wasn't a removal because there was lack of confidence or loss of confidence in strategy, et cetera. It was it appears to be what it was.
Exactly right. It was what it was.
Yep.
And it is what it is.
So, it's a coin of phrase.
So what about the freight markets, though?
We'd have to ask Zach about that. Is he here?
He is here. Zach, what is happening in the freight markets today?
Hey guys, so tender rejection rates, national capacity appears to be in a holding spot at the moment. Tender rejection rates hovering right around 24.5% right now. Again, still historically high. Spot rates, following suit. We fell down a little bit looking at some of the spot market lanes over the last week or so, which again, a lot of these rates were basically coming down off of that Labor Day high. I know it's late September at this point, or we just started fall. But again, we're still seeing some of that residual effect as we had this peak value leading into Labor Day, and the week after Labor Day really had supply side issues as well. Some of that could have been due to road check and whatnot, but again, nonetheless, we have started to see things tighten back up again. But it's not all in the dry van sector, which of course is one of the strongest sectors of the freight market itself. We're seeing reefer rejection rates really lead the way and pick back up after seeing one of the, it looked like things were going to soften quite significantly as volumes came down last week, the last couple of weeks. Now we're starting to plane out a little bit. Tender rejection rates for van have actually kind of leveled out, but reefer rejection rates now jumping back up to about 38% after hovering down below 35% for a little while.
Excellent stuff, Zach. As we talked about this morning, the volumes, when you look at the volumes and break it down by length of haul, the long haul seems to be ticking up, not significantly, but it is definitely up. And the other, when you get into the tweener, the mid haul, the short, and certainly the local, those seem to be dipped and staying fairly steady. Does that have any implications for us moving in out the next week, 2 weeks?
Yeah, I think that's a sign of the moment in the freight market, because we're still seeing a significant amount of freight coming into the ports. This is that peak season, traditional peak season for import volumes. They get transloaded into trucks and they come across the country. They move into the megalopolis and areas where a lot of consumption is centered. So long haul freight is that time of year for long haul freight. And then when you get into November, December, you see a lot more uptick in the short haul freight traditionally, because that's where that freight has been positioned. We saw it in March when we saw that early outbreak of COVID in the United States, where we saw short haul volumes really grow dramatically. A lot of those, DC-centric areas like Harrisburg, Pennsylvania, had a big, strong surge of volume coming out of that, going into some of those metro areas sitting there around the coast. Right now, we're seeing a lot of that replenishment freight coming into the ports. They're repositioning into areas for the fourth quarter retail peak, more than likely. And again, we still have unexpected demand that has not been filled, that has to come across the ocean. So they're still on back order for a lot of things.
And Zach, also looking at our ocean dashboard, which shows the bookings right out, I believe 7 days. That looks fairly strong. There's no dip even out 7 days in both shipment volumes, which is those would be the bills of lading, and then even TEU count. Everything seems strong, at least going out the next week. Does that and that's from all ports into the U.S. Does that extend this long haul move tick up or create some pressures or thoughts there? What's the implications with that?
Yeah, I think, obviously the ocean freight has really been a leading indicator for the freight market this year. A lot of that's a hangover from this trade war scenario and environment that we've seen, as China was actually becoming less of sourcing partner with a lot of these companies in the United States, but now that trend is totally reversed, and they're struggling. A lot of these shippers are struggling to get the freight that they need, as they didn't really anticipate. They didn't have any of this in their budgets and their forecasts for 2020 back in the beginning of the year. So this is a lot of unexpected demand. And I think the fact that we're seeing these bookings continue, Golden Week is just around the corner, and this is the second biggest holiday period in China, where they shut down for a couple of days in the fall. Everybody has to go leave the factories, et cetera. So a lot of these shippers are trying to get in front of that, and some of these bookings, again, for the next 7 days, are trying to get around that, which means that we're not going to see this freight for another 14 to 20 days, more than likely, hit the West Coast, which again just gives that potential energy to the freight market that we've really been living on for the last several months. And again, Los Angeles volumes, Ontario volumes, those are all key markets to watch as we start to see that, but all up and down the West Coast, and we're starting to see a little bit of a return to the East Coast as well, as the ports of New York and New Jersey have grown significantly over the last several weeks, as well as Savannah.
Exactly. Let's talk about capacity. I know that it was OTRI, tender rejections are at 26%, and then down at 24%, 23%. I think that's all a wash. Anything in the mid-20s is very tight capacity.
You're still talking
no matter
about
what.
1 and 4.
1 and 4, right?
Yeah.
So what number does that have to come down to before you start saying, you sit behind your podium and you start telling us, capacity is loosening? What number? Is that sub 20 or maybe a little bit less than that?
It's all relative. It's all depending on what those rates are based on. And so we're about to go into bid season. And again, a lot of the tightness that we're seeing is not necessary. It's almost artificial in a way, because we just came out of a really, a declining freight market where we saw a lot of contracted freight rates come down. You looked at the Cass line haul index, and we saw like a 6% decline in January in that. And that's an indication that a lot of this contracted freight got some rate decreases, because the market was super competitive and very saturated in 2019, of course, resulting from an overheated 2018. It's like that pendulum swing. So some of this has to do with the fact that contracted rates were depressed. And so I think that once we get through a bid season here, we're going to start to see some of those contracted rates move closer to market level, where that'll bring this, our number down. Now, whether or not it's 20% or 15%. That's a little bit relative. It's all dependent on where you are in the marketplace at that given time. If you're seeing a lot of spot freight, if you're a broker out there and you're living on spot freight, the moment that it starts coming down, it's going to loosen. Now, if you're a carrier or a shipper that has a lot of contracted freight going on, I think really the market benchmark for when we see things really in a stable environment where you can consistently rely on your freight is around that 5 to 10% range of tender rejections. That's when we're really in that kind of normal environment, not necessarily, with any significant volatility in that as well. So.
Thank you very much, Zach, for those freight market insights. And you can check out Zach's chart of the week on FreightWaves.com that he publishes every Saturday night, giving you the most useful or the most compelling and narrative-based sonar data for the week.
Yeah.
Tells you exactly what's going on in the freight markets. This week is all about intermodal rates. And we're seeing spikes in intermodal rates, especially out of the West Coast. It's a great article, so go to FreightWaves.com. Yes, surcharges as well, definitely. Let's switch gears a little bit to the economy. And Anthony Smith, do we have good news or bad news on economic releases?
This is always a bit of a mixed bag, but I think you can find some of the positives throughout some of the most recent releases. So looking first and foremost at industrial production, this has had a month-to-month rise over the past few months, and it's been talk of many sectors, just kind of how this has been a resurgence or recovery throughout COVID-19, and we've seen a substantial rise on a month-to-month basis, and we've seen more rise in the most recent month, but showing signs of slowing. We saw that the most recent month of August had an increase of 0.4% for overall industrial production. And so this is showing that there is some slowing down within industrial production. And I am anticipating, even though industrial production was one of the first two sectors that we really called to have recovery with that in housing, which we'll get into a little bit here shortly, I am expecting industrial production to likely ease throughout the remainder of the year. As we get towards the end of the year, this is exactly where we saw industrial production start to pick up quite a bit. So there's going to be harder comps. The other thing to note is that employment within the field has been a little bit lagging in comparison to some of the production, and some of the actual new orders put in place are starting to get deferred, I think, into some of the backlogs. And so I think what we'll see in manufacturing is some easing within the industry as we finish out the remainder of the year. And of course, being this an election year, might slow some capital goods expenditures for business-to-business activity. The other aspect with this is that there was a lot of I think, attention around it, but had to keep in mind that this is still around 7.7% below the year-ago level. So always kind of keeping things into context. Even though we are enjoying to see the month-to-month rise, we also have to keep into mind that there is going to be substantial challenges on a year-over-year basis.
Anthony, I'm interested, what's the trend line on new orders been over the last couple of months?
Over the last couple of months, new orders, namely within manufacturing, looking at non-defense capital goods, new orders has been positive, has been on a upward trajectory. So definitely good news. Again, there's going to be, I think, a bit of a backlog if we're looking at how fast production can come online for some of these factories and some of these new order units. We saw that there was some positivity within machinery, so that was a bright sign. Of course, the more consumer-facing segments like automotive and vehicle parts were very positive and stood out as a beacon within the subsectors of the most recent report. But really kind of looking at the remainder of the year, I think there's going to be some moderation within manufacturing as we end out the year. Maybe some upward movements after the election cycle is over and as we get through the first quarter of 2021.
It kind of all goes back to jobs and jobless claims. What were the numbers like last Thursday with jobless claims, and what are we kind of expecting for this Thursday's release?
That's right, Kevin. Jobless claims is always going to be the main focus of the recovery for the U.S. economy and really the global economy as more productions can get back to the workforce. And what we saw in the latest numbers of jobless claims was that there was a downward movement to 860,000 initial jobs claims for the most recent week. That was last Thursday. The other more substantial measurement for continued claims, so these are Americans that have applied for jobless claims and previously and continuing to apply for assistance, and that's moved down 916 million in the most recent week. Of course, this data is put on a 2-week lag as opposed to the initial jobless claims, and now this stands at 12.6 million for continuing claims. But again, there is a now downward adjustment for those initial benefits that were federally backed from the $600 now at the federally backed $300, with a few states pitching in additional funds, but that again is on a state-by-state basis.
Go ahead. Anthony, I was wondering about retail sales. Where are retail sales at right now? Consumer confidence, that
Yes, so retail sales always going to be another focal point and an offshoot of what's happening with the employment market and jobs claims. And so what we're seeing with retail sales is that there was a downward movement, an upward movement to 0.6% on a month-over-month basis. So the thing to kind of note with retail sales is that it is starting to ease, it's starting to decline, it's starting to decelerate. But the positive side is that this is some upward movement despite the decline in those jobs claims bonus benefits. So we are still seeing month-to-month rise in retail sales and manufacturing by industrial production, but with both measures, we are still seeing some deceleration. Some of the bright spots with retail sales might still be that we have not had our Christmas in July, which is now kind of pushed into October, I believe, with most of these e-commerce facing consumer segments doing their, copying kind of like Amazon Prime Day. So we haven't quite seen some of those e-commerce holidays pop up just yet. So that might give a bump up in some of these retail sales figures one more time, or maybe one of two more times before we get into the end of the year and the final holiday season push.
Always good news to have retail inventories down and retail sales up for the year. Thank you very much for those insights, Anthony, our lead economist here at FreightWaves, and we'll talk about the initial jobless claims that come out Thursday on Thursday's edition of the Midday Market Report.
Absolutely. Don't miss it, 12 noon Thursday.
And talking about jobless claims and jobs and things like that, we have
and the reoccurring claims as well. But absolutely. So Hunter Whirley is managing partner and operations at FPC Riverwood, and he's joining us today to talk about the hiring market and recruiting market and what's going on in logistics at this particular time. Hunter, welcome to the show, my friend.
Good to be here, Michael, Kevin. It's a pleasure.
Excellent. Hey, can you give people really quickly before we dive into this a little background on yourself and FPC Riverwood, please?
FPC Riverwood, we specialize in partnering with companies in transportation, logistics, and distribution, largely looking at pairing them with leaders from the manager to the vice president level that are really going to help them achieve their goals and move on to the next level of their operations.
So Mike and I were just discussing, we were talking about with Anthony Smith here, initial jobless claims. What does the job market look like for transportation, logistics, kind of our world here?
I think it was pretty well said. And, you looked at retail, you looked at a lot of different factors, but looking at the tactical level, we see a lot of movement from managers, supervisors, those who touch the product, those who are face-to-face with customers. We've seen a lot of movement over the last couple of months. Now, juxtapose that with, say, more senior leaders. We're in an election year. People are trying to establish their budgets. And I think that people don't necessarily want to make a big move in senior leadership as readily. And we're going to see a lot of that go into 2021 for senior leader movement.
Yeah, that's very interesting. I mean, it's a totally different market all over the place right now. And hiring and recruiting obviously is, I would think that there's some differences, right? It's a kind of an anomalous year there. What are you seeing? What do you say is, how do you be successful in recruiting in today's market?
Excellent question. As always, I go back to have a good process. If you're a hiring manager and you can spell out, okay, this is what our hiring process looks like. This is a timeline. You can provide quick candidate feedback and pull the good candidates that you want into your organization quickly. That's what I've seen be very successful.
Very good. And what about retaining? We talk about recruiting all the time, and what about retaining though? That's an integral piece of the whole recruiting process. Is once you get great talent in the door, how do you retain them?
Excellent. So transparency has become huge. Right now, people are dealing with more stress in their lives than they maybe have dealt with in their lifetimes. So being a leader and being able to address people in your organization and say, this is what we're doing as a company. This is the way ahead. This is how we win. That goes a long way. And then the second part, what I would say is show people career progression. One of the biggest things I hear is people say, well, I'm looking at this opportunity because I don't know where to go with my current organization. They haven't showed me a roadmap. I don't know what my future is, but I'm kind of taking it on my own to go get it rather than look to stay.
Yeah, excellent. Those are great points. I imagine culture is something that comes up. What are you hearing from the candidates that you're recruiting to fill these positions? Is there a change or a common theme in their questions that they have back to those, other than the career progression, et cetera? Is there a cultural aspect, safety aspects, other COVID-related type of things?
I think that a company's brand goes a long way no matter what time it is. And, we've had great candidates look at opportunities and then they find out, oh, it's this company. And they say, pass. I pass. So people know your brand out there, and building a great brand is important, and being responsible to your employees.
So one of the things that this pandemic has changed in a lot of ways is work from home. Anyone who can work from home has been working from home. We're talking about it on gasoline purchases, right? Mm-hmm. The huge decrease and kind of a two-tiered mm-hmm. system. How is that playing into recruiting right now, this work from home phenomena?
I think that we've actually seen a level of stress put on people that they didn't think that they were going to inherit. And it's not just work from home, it's take care of your children at home, look at, a changing job market at home. And so it's not just work from home. We've had a very large shift, but I think people are finding it may not be all it's cracked up to be to work from home. And there's some goodness in going to the office. And, it's 6 1 half dozen another, depending on who you speak with. But as far as leaders in industry, so many of them said, I can't wait until I can look my team in the eyeballs again. We can all be on the same page and just have more momentum together as a group, all being able to real time speak.
Yeah, that's very interesting. I imagine there's more turnover in the new hires now as well. Can you imagine, and maybe you're seeing this, Hunter, I'll ask you this question. Is there more turnover in new hires over this year because they find it difficult to assimilate into the group working from home?
I think a lot of people have held off a bit in hiring as they try to figure out how to onboard somebody. And it's different from role to role. I mean, if you find an established, say, broker, there's not much onboarding. It's bring your book of business. Let's broker some loads.
Right.
If you're looking at somebody else who may be coming more into the organization as a junior leader, especially, that's where it gets really tricky.
Yeah, it definitely would. What are some industries or positions that you're seeing the most strength in on people recruiting, adding positions? Is it in 3PLs, on the carrier side, warehousing? Where are you seeing the strong market?
3PLs and overall transportation have been hiring a lot, and it matters what you support. I like what Anthony was saying in that manufacturing was coming up. And we've seen a little bit of movement in manufacturing. Where we really saw a slinky effect in hiring and goods delivered was food production and also processing, because you had the processing plants where people work so close together and they had to change operations. that made a huge slinky in the supply chain where people had to adjust. How do we do that? But what I'm keeping my eye on right now, and one of my KPIs, is aviation. There's so many dominoes that have to fall, and once we start to see aviation come back a bit, that's the landscape is changing for the better. That's one that I'm keeping my eye on to say there's so much that has to come into place. That's what my eye's on.
That's very, very interesting. Very interesting, Hunter. Solid point. I got one last question. We only have a minute or a minute and a half here, 2 minutes left. But there's been a lot of talk about this work from home experiment, right, that we've all been forced into. And that really causing people to leave Metropolis, right? Megalopolis, if you will. And also, but giving companies that flexibility to cast a much wider net geographically for specific positions. Are you seeing that as a trend in your recruitment and in your hiring from corporations to recruit? Are they casting that wider net?
People are much more open to casting a wider net right now, and you're really seeing it in being able to bring in some professionals to your organization that you wouldn't otherwise have been able to, just because we had a geographic mindset that they needed to be here. But some people are doing it very, very well and capitalizing and building fantastic teams off of it.
Thank you. Thank you very much for your time today, Hunter. How do our viewers reach out and contact you about recruiting solutions?
Hunter Whirley, Whirley. Please reach out on LinkedIn, and you can see what we're doing on a daily basis. Thank you, gents.
Excellent.
Thank you very much.
Thank you, Hunter. Have a great day. Yeah, very insightful.
The job market is always an interesting topic, and speaking with the recruiters is always interesting because they have the fingers on the pulses of the trends of the hiring. Yeah, and it's interesting. I thought it was a solid point, and it's worth really mentioning one last time, is his metric, his go-to that he's looking for as far as, hey, we're back in a very good way, is that uptick in recruiting in the aviation sectors. Yeah, you have to think that's a really good point. Yeah, if you see strength in aviation, you're turning a corner right now, because that's been the hardest hit. Domestic, international, airline passenger flights. I mean, they're still grounded 3/4, maybe 2/3 now. Yeah. But yeah, so it is very difficult. And let's pivot now to the ocean, and some new regulations, some new customs kind of policies that went in effect a couple years ago with Lori-Ann LaRocco. How are you doing today, Lori-Ann?
I'm good. How are you?
Good. Can you give us a little bit about your background and the books that you've authored for our audience?
Sure. So first and foremost, I'm a trade expert, and I follow maritime. I am the senior talent producer at CNBC, and I'm the author of Trade War Containers Don't Lie, Navigating the Bluster, and of course a columnist for American Shipper. Yeah, so let's talk about your latest commentary that was published on Friday for American Shipper. And can you explain what the WROs are and forced labor in customs? It was fascinating. I didn't really have too much experience with this, so it was a great read. You can find it on American Shipper. And what's the breakdown on that? Sure. So a WRO is the acronym for a withhold release order from customs. So that means that there are a list of commodities or products that customs on the lookout for. And what the WRO, there were 5 issued last week by customs under the Trump administration as it relates to forced labor from the detention camps out of China. And one of the biggest, most pervasive soft commodities out there that's on that list is cotton. So that's a very hard commodity to track because it can bleed into other trade routes. And so a lot of retail executives were calling me last week saying, what is going on? Is an Abercrombie and Fitch? Is a Gap? Are these companies exposed to possible supply chain problems? And the answer is I don't know about for those companies, but for retailers, this really is a wake-up call for you. You have to know every facet of your supply chain, or you can have your product detained.
So
and that's what it is.
So, Lori, I'm interested. You said 5 last week, and the way you're talking about this, that seems like anonymously high. Is that right? Is that like a very high number to have 5 issued in a week? What's normal, I guess?
Honestly, I don't know what is normal. These were expected. Customs actually, sent out like an advisory back in July that they were going to be looking at issuing WROs where certain companies were going to be targeted, like Lenovo. They get direct shipments from Hythe Bitland for their technology, and that company is on the WRO list. So that means there are Lenovos that were seized by customs or will be seized by customs if they come in.
So let's talk about cotton, because cotton is a hard commodity to track. Your vendor's vendor might be sourcing from a company that is under WRO, right? Yeah. And how do you know that? Is it like directly from that, or any use of that indirectly that comes into your goods? Is that something that you need to be on the lookout for?
The answer is yes. I mean, Customs said last week that you can have the shirts that you guys are wearing right now, even if you had 1% cotton that were made harvested by the Muslims in the detention camps, it would be subject to being seized by Customs. So it doesn't have to be 100%. Customs has the right, on the assumption based on their fact-finding and things like that they can seize products. And that's why they were giving all of these companies the heads up. You have to look at the supply chain. But the problem is, and I don't have to tell you guys, supply chains are not digitized in the very far reaches of China. So it takes a lot of due diligence for companies to really look at where they're getting their product.
Yeah. Customs has the rights to do a lot of things. I learned early on in my career, and they'll bring guns, dogs, and hatchets with them. So I learned very quickly in my maritime early in my maritime career. But one thing you said on these WROs, which I just wanted to clarify, is these are warnings put out that they're looking at this particular region of a supplier or these specific suppliers for these type of discrepancies where they could then seize it once it comes. These are not containers necessarily that are held at the port, but they're warnings to industry that you need to be watching where your supplier is at, or who your supplier is, because we're watching them and we could stop your shipments at the port. Is that correct?
Yes. I mean, they gave a strict list last week. They had the Customs issued an unprecedented 12 WROs this year, including 8 on goods from China. I even throw up a photo, courtesy of Customs. Hair extensions from China were seized over the summer, and those were on the list. So again, you have to, they tell you the companies of who they're looking at and who are on the WOR list. But the interesting thing is direct shipments. You can find those very easily. But when it comes to cotton, which is porous and it can bleed, that's the term that folks use. If you have someone picking cotton from a detention camp, and it goes into the intra-Asia pipeline, which we've talked about before, Malaysia, Vietnam, Cambodia, all these countries that a lot of companies get their product made from, even yarn, that cotton can be in that product. And if it's not trackable, and even Customs, they even told me flat out, it's very hard to track. But if they have the suspicion that that product could have been partly, that cotton came from that region, they have the right to seize it. So you really have to do diligence. And honestly, I don't know how a retailer can do that, but that's up to their outsourcing.
Yeah, those my next question was, if I'm an apparel company or a retailer, how do I even do that? But that also raises the question, how does Customs even track these shipments too, or that the cotton, if it's very tertiary or indirectly from different places. I mean, how does even customs determine whether this is coming from a forced labor camp or what?
Well, when it comes to their background, and I tried to ask them, like, the secret to the sauce, like, are you just looking at bills of lading, how you're doing it? They did not want to, divulge that information, but they said because forced labor has been in the news for a while now, with the investigative reporting, I guess with their own intelligence, that they can track certain things. But it just shows you that it's unbelievable, because 85% of China's cotton is produced in that region. 85%. And the U.S. imported $50 billion worth of textiles from China last year.
Wow.
And so so I asked them, I said, give me a ballpark here. Give me because we're all about numbers, right? Dollars and cents. They said from the 5 WORs alone, okay, that I list in the column, roughly $200 million annually can be reduced. That means $200 million worth of product can be seized. And so that's a lot of money. So, you've already had some companies like Abercrombie from Gap saying that they're going to make sure that, their product is not made from cotton from these forced labor camps. But it's a very real problem.
So would these companies then need to reach further down their supply chain and look to where they're sourcing the raw material? I guess that's really your only choice. If they just suspect that it would, and if it's produced in Cambodia and 85% of the cotton comes from this region, and we know that that cotton bleeds into Cambodia, there's your suspicion, isn't it?
It really leaves you wide open, the exposure and the risk. But like you said, you have to go all the way down to that. But if you talk to your folks in Cambodia that are making your sweater or spinning your yarn, you have to just do that one extra step. Where are you getting the product? Where are you getting this? Where are you sourcing the cotton?
Yeah.
I guess that's the only way to do it. Where are you sourcing it, and having some type of documentation from your vendors to cover yourself, I suppose.
Yeah. Are there other regions of the world that are particular hotspots to this other than China, Lorianne? Do you know?
Honestly, I don't know. I've just been covering a lot as it relates to China, but with the forced labor camps, China has been the big one that the U.S. has been talking about.
Gotcha.
Yeah. So Lorianne, we have a couple minutes left. Do you want to go over your next commentary on American Shipper that'll be out probably this afternoon or tomorrow morning?
Yeah, sure. I mean, we've been talking about, like these, skyrocketing trans-Pacific rates, right, from the carriers. We've been talking about the volume. So really, I wanted to look into like the pulse of the consumer. Let's dive into those containers and see what's driving those rates. What's filling those containers. And, a lot of it's DIY. Of course, you've got your stone countertops. You've got apparel, and you've got a sprinkle of the holiday shopping season. So we dive into the containers in the next column.
Right, fantastic.
Very interesting.
Now, how do our viewers reach out and contact you directly and ask questions, give you story ideas, become sources?
Well, I'm always looking for new sources. I would say LinkedIn. LinkedIn's best. I publish a lot when it comes to the trade data there. Twitter, they can reach out to me as well, but LinkedIn is the best way.
Thank you very much for your time, as always, Lorianne. And if you haven't checked out Lorianne's publishing that she does on LinkedIn as well, fantastic stats and data all the time.
Oh, yeah, absolutely.
Every day. She's
very
just coming out
insightful,
with something
Lorianne.
else.
Thank you so much. Wow.
Thanks for having me, guys.
Thank you. Yeah, forced labor camps and WROs.
Yeah, it's a very sticky situation because, if cotton is coming from a forced labor camp, that they have all the incentives to cover that up as best they can and obscure where that's coming from.
Of course.
And you have, as an apparel company or a retailer, you have to go out and dig through that cover-up,
Quagmire.
basically. That quagmire, yes. That's a
Because
very good word.
if it's coming out of those, they're underselling, right? I mean,
They're underselling, and they're hiding, and they're probably have fake documents, and
Absolutely.
that whole thing that comes with black market goods, basically.
Yeah,
So
absolutely.
it's it's tough. So
It is.
$200 million worth of products that can be seized. So that is worrisome.
Right on. Hey, let's talk about what's coming up next.
Let's do
what's
that.
coming up ahead. And the first one that I would like to talk about, I know you do too, as well, is our next virtual event, The Future of Logistics Real Estate, is September 29th, 2020. And it's a virtual event again.
One day.
Yeah. You don't have to register, but I would. And we'll have the Slack channels going and everything else. So FreightWaves hosts the first virtual event focused solely on the future of logistics real estate in the freight industry. So you'll hear from experts from various links of the supply chain about automation, warehousing, labor solutions, and advanced strategies for optimizing the supply chain from start to finish in partnerships with Prologis, the global leader in logistics real estate. Will help you prepare for the logistics network of the future. I'm looking forward to this one. And, Sarkos is one of Dooner and I's favorite on
Yes.
what the truck.
RoboCop.
The exoskeleton.
Yes. RoboCop. I call it.
Awesome.
Some people call it Iron Man. I call it RoboCop.
Yeah.
But it's very interesting. And warehousing is such a hot topic right now, especially
Sure.
with the rise of e-commerce, which is a very different thing than your traditional retail to store distribution that is done in bulk, basically.
Yeah, things are changing so
Yeah,
much
the
in there. I mean,
automation
reverse
is-
logistics is going through the roof. We talked about that, I think it was last week, really, it was actually at the Global Trade Tech event, talking about the reverse logistics and the huge leap in percentage of returns because of e-commerce rather than brick and mortar purchases, right, are huge, which is a strain on warehousing, sortation centers, distribution centers, et cetera.
It is. It definitely is. Coming up this afternoon at 2 p.m. is Great Quarter Guys with myself and Andrew Cox over here, and we are going to talk a little bit about Nikola, I imagine, kind of going forward.
I'm sure
with that
Andrew's chomping at the bit to talk about it.
Chomping at the bit, and we're going to talk about the SPACs. SPACs are all the rage right now. Is what Nikola
Does this
did.
hurt it? Does this dent or tarnish
I think
the?
it kind of does a little bit. At some point there's going to be fraud all through SPACs. I'm not going to say Nikola is, but the more SPACs there are, and the more reverse mergers, the higher the chance of fraud.
Absolutely.
And that's kind of what you see in all financial products. Definitely. And then tomorrow, 12 p.m. Eastern Time, Dooner and I put that coffee down. The Freight Sales Podcast. We talk about infographics and using infographics to really market and
Very
drive
cool.
content.
Very cool.
And creating that flywheel effect.
Yeah, excellent stuff.
Yeah.
Hey, and yesterday on What the Truck, our most watched single episode ever on FreightWaves TV, Nikola, Gravity of Allegations. On the show, Dooner and I looked into the fallout from Trevor Milton's leaving Nikola, talked to TikToking truckers, Wayne Craig, who is on here. It was a great show, and if you missed it, you can check any of them out on demand on FreightWaves TV app or on your favorite podcast player. Thanks for joining us, and have a great day.